So for today, our lesson is on government grants, and that is under PS 20, Accounting for Government Grants and Disclosure of Government Assistance. So what are government grants? These are assistance received from the government in the form of transfers of resources in exchange for compliance with certain conditions. So it is also called as subsidies, subventions, or premiums. So from the term itself, it comes from the government. It is a grant from the government. It excludes those forms of government assistance which cannot reasonably have a value placed upon them, and transactions with government which cannot be distinguished from the normal trading transactions of the entity. Okay, so only those which meet the asset recognition criteria are recognized as part of the government grants. Okay, so examples there, you have receipt of cash, land, or other non-cash assets from the government, receipt of financial aid in case of loss from calamity, forgiveness of an existing loan, or a benefit of a government loan with below market rate of interest. Meanwhile, the following are not part of the government grants. We have tax benefits, free technical or marketing advice, provision of guarantees, government procurement policy that is responsible for a portion of the entity's sales, and we also have public improvements that benefit the entire community, and also imposition of trading constraints on competitors. So the uh, first four there, although they are not recognized as government grants, but if these are significant, then they can be disclosed. So what are characteristics of a recognized government grant? So it should be an economic benefit that is received from the government. So it could be in a form of an asset because it's an economic benefit, or it could be direct benefits to a specific that is specific to the recipient entity. It should be measurable. It should have been received, or it will be receivable in return for past or future compliance with attached condition. There's also reasonable assurance that the recipient entity will comply to the attached conditions, because there are grants wherein na siya necessary nga buhaton sa entity before they can fully recognize it as an income. And there is a reasonable assurance that the grant will be received. So how do we recognize a grant, or when are we going to recognize the government grant? So there should be the existence of the following. So the government grants shall not be recognized until there is reasonable assurance that the entity will comply with the conditions attached to these grants, and the grants will be received. So you have to take note that even if you have received the grants, it is not automatic that they are considered as income on the part of the receiving entity. So dili siya automatic sad nga i-recognize as government grants, especially if there is conditions attached, 'di ba? Sa obligations and contracts, there are certain nga mga contracts or na mga obligations wherein nagdepend on conditions, 'di ba? Na conditional, and it will not take effect or dili siya ma-perfect ang agreement if dili mahitabo tong, or di siya mahimong binding if dili mahitabo ang condition. So naa po ingon ana nga case for government grants. That's why mere receipt, igo ra pagdawat sa grant, it's not conclusive evidence that the attached condition has been or will be satisfied. And then we have classifications of government grants according to the attached condition. So man itong gi-mention earlier that there are grants nga depend on conditions. So there are two types. We have grants that are related to assets, and there are also grants that are related to income. So the first one are the grants related to assets, which are grants whose primary condition is that the recipient entity should acquire or construct long-term assets. So from the term itself, that is related to an asset. So dapat sad ang condition should be the acquisition or dapat makagama og asset. So for example, you have received cash from the government wherein you need to acquire certain equipment using the money. Or there is a land received from the government and the condition is you need to construct a building. Okay, so in that case, if you're not able to acquire the equipment, you cannot recognize the grants, or if you cannot construct the building on the land, then you cannot recognize the land as a grant from the government. Or if even if na-receive nimo siya and then na-fulfill na nimo some of the conditions but dili nimo ma-continue ang agreement ninyo sa government, so naay possibility na ibalik nimo ang gihatag sa government pag dili nimo ma-fulfill ang conditions. The second one is the grant related to income. So this includes all other grants nga wala maklasify as grants related to assets. So, meaning this is the residual definition. Para sa na sa non-current liabilities or non-current assets, kung wala siya ma-fall under current, so ato na tanan sa non-current. Then, for the initial measurement, so the grants are measured if these are monetary. If these are monetary grants, these are measured at the amount of the cash received or the fair value of amount receivable, or it could also be carrying amount of the loan payable to the government for which repayment is forgiven, or it could be at a discount on loan payable to government at a below market rate of interest. If these are non-monetary grants like land and other form of resources or assets, so these are measured at fair value of the non-monetary assets received, or alternatively at the nominal amount or zero plus direct cost incurred in preparing the asset for its intended use. So as a continuation, so if the grants is in the form of a forgivable loan, wherein the loan is provided by the government or ang lender is the government, in which the government waives repayment subject to certain conditions, or the government grant could also be a loan at below market rate of interest. So again, so this is what is referred to earlier nga carrying amount. The measurement of that would be at the carrying amount of the loan payable to the government for which repayment is forgiven. And if it is a loan at below market rate of interest, so it is the difference between the initial carrying amount of the loan determined in accordance with PFRS 9 and the proceeds received, so that is a discount, will be treated as the government grant. Then, how do we account for the government grants? So, government grants are recognized in the profit or loss on a systematic basis over the periods in which the entity recognizes as expenses the related costs for which the grants are intended to compensate. So, in other words, you're going to apply the matching concept and you're going to allocate the grants over several periods. For example, if the grant is related to a depreciable asset, So you're going to allocate also the grant over the period in the same manner as computing depreciation. So i-allocate siya. Mura po siya itong revaluation surplus nga piecemeal realization. So parehas siya. So you're going to apply the matching concept. So that is, if the related expense is not yet recognized, income from the government grant is also not yet recognized. So if it is a grant that is related to depreciable asset, so the grant will be recognized in the profit or loss over the periods and in the proportions in which depreciation expense on those assets are recognized. So this is what I have stated earlier. Kung ang asset nga na receiver natay money nga na receive unya gipagama siya og building or gipalit ba siya og equipment which is subject to depreciation. So, ang grant sad, imo siyang i-allocate in a systematic basis over the periods of, for example, the useful life of the asset or useful life of the building. So, parehason siya og allocation. So, i-divide nimo over the useful life pod sa building or useful life sa equipment. If the grant is related to non-depreciable assets, for example, land, so you're going to recognize it in the profit or loss when the costs of fulfilling the attached condition are incurred. So for example, there's a grant of land condition on the construction of a building on it is recognized over the periods that the constructed building is depreciated. If it is a grant that is related to a financial aid for expenses or losses already incurred, so naanay na incur nga expense and gitagaan ka og grant sa government, it could be equal to or it could be lesser or it can be more than the related expense or katong expense nga na gasto na. So you will recognize immediately in the profit or loss when the grant becomes receivable. Kay wala naman tay condition nga dapat i-meet paadto kay na-incur naman ang expenses. Recognizing government grants in the profit or loss on a receipt basis, meaning you're going to recognize it once you have received it, that is prohibited. Bawal siya as it violates the accrual basis of accounting. That's why naatay methods here. So if it is depreciable asset, you're going to allocate it over the period the same as the depreciation. If it is non-depreciable asset, it is recognized in the profit or loss when the costs fulfilling the attached condition are incurred. And if na-incur na dayon ang expenses, so walay problema, igo na nimo siya i-recognize largo ang government grant. A receipt basis would only be acceptable if there is no allocation basis other than the one in which the grant was received. And then, how do we present the government grants related to assets? So, in the financial position that is recognized, this is not only in the statement of financial position, but both the profit or loss section in the SCI. So, not only SFP. So, if it is gross presentation, the grant is presented as a deferred income, which is a liability. If it is net presentation, it is deducted from the carrying amount of the asset. In the profit or loss section, income is recognized separately, or it could be under other income. And then if it is a net presentation, it is deducted from the depreciation charge. This is for grants related to assets. If it is related to income, at gross presentation, that the income from grant is reported separately or in the other income. And if it's a net presentation, it is deducted from the related expense. And then we have repayment of grant, government grant. So a government grant that becomes repayable is accounted for as a change in accounting estimate that is treated prospectively under PAS 8. And why is it that there is a repayment of grant? Because the entity was unable to fulfill the conditions related to the grant. So, for example, they receive money and the condition is pang bayad ni siya to construct the building within 2 years. And what if wala na construct ang building? So therefore, you need to return the grant to the government. Mo na siya nga na ay repayment. And it will be treated prospectively. The repayment of a grant related to income is deducted from the related deferred income balance, if any, and the difference will be recognized in the profit or loss. If the repayment of the grant is related to an asset, so it is treated as reduction in the deferred income balance under gross presentation, or it could be an increase in the carrying amount of the asset under net presentation. And any cumulative additional depreciation that would have been recognized in the absence of the grant is recognized immediately in the profit or loss. Okay, so that is the end of the theory nga part. Okay. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.